All right, so I welcome us once again as we make progress, and we are still talking about candlesticks. So I want us to go a bit deeper into candlesticks, what they mean, um, how they come off on the charts, and then how you can. Let's just go deeper into candlesticks. Yeah. All right, so we spoke about the fact that candlestick is a type of chart that gives bodily representation to the price movement on the charts. We will remember that we say that what we can see to the right-hand side of the chart are the price of the two currencies. And we will remember that I'm saying that these prices that we can see here, which is often what we can see, is the amount of the quote currency that we need to get the base currency. I'm sure you can remember that. All right. So, and we can also remember that I said every candle has four properties: the opening price, the closing price, the high, and then the low, which is what we termed as what? As the OHLC. That is what we termed as what? OHLC. O stands for opening, H stands for high, L stands for low, and C stands for what? For close. Open simply means that that is the price that that candlestick opened, that the market opened rather. Candlestick is just forming a representation. So open is the price that the market opened at that time. The low is the lowest it got to during that trading period. The high is the highest price that that asset got to. And then the close is where the price eventually closed. And there are other properties I'm sure you saw on baby pips, which include, things like the body of the candle, you know, let's bring this to the middle, you know, and then the wick. And then we talked about the fact that this is the upper wick, you know, this is the upper wick, this is the lower wick. However, this is the high, this is the low. However, what we will determine, if you remember, whether this is the open or the close, is whether it is a bullish or bearish candle. So let's make the color of this innocent. Making it green or anything might mean something. So let's just put it here. So if this candle opened below and went ahead to close above, then this is a bullish candle. You can remember, right? And if it opened above and came ahead to close below, then that's a bearish candle. So the other thing I want to talk about when it comes to candlestick is the fact that there are what we call time frames. Time frames are what we use in analyzing the markets, in the sense that, let's start from, you see all these things you can see up here, they are what we call time frame. So all these excuse me, they stand for minutes, H stands for hours, D stands for daily, W stands for the week, M stands for the month, which is 1 month. And then when you see 3 months, it is 3M. And then can you see that it's different from minutes? The one for months is capital letter M. And then the one for months is small letter m. Good. So the one for months, you can see 6 months, 6M. And then on and on. So let's start from 1 minute. Remember we said that every candlestick has a price that it opens. So 1 minute means that the candle in its formation forms in 1 minute. Like I said in the previous video, 2 minutes candlestick, everything that that candlestick is trying to form it does so within 2 minutes. And then we have 5 minutes, 15 minutes, 1 hour, 2 hour, 4 hour, and then we have the daily. So when it comes to analyzing the markets, we have two types of time frames basically. When it comes to the analyzing of the markets, we have the higher time frames, and then we have the lower time frames. We have the higher time frame, and then we have, excuse me, the lower time frame. So as an intraday trader, when it comes to higher time frames, the time frames we call higher time frames include the weekly, the daily, and then the 4 hour. H4, 4H, it could be anyone, because when you check it on MT4, I think it is H4. I'm trying to confirm. Yeah, when you check it on MT4, it is H4. But when you check it on trading view, yeah, it is 4H. So H4, 4H is still the same thing. While lower time frame includes, the 1 hour, the 30 minutes, the 15 minutes, and then the 5 minutes. So these are things, these are things that you should take note of even as you are learning. So as a trader, because we will soon begin to talk about technical analysis, and in technical analysis, we'll talk about how you can analyze the markets and then make a decision. So as a trader, there is also what we say, which I'm so sure you saw on Baby Pips, which is that the trend is your friend. That is to say, in all that you do, you always want to follow the trend. And what that implies is that the best way to know which trend to follow is to look at your higher time frame, which is what? The weekly, the daily, and the 4 hour. So as traders, what do we use time frame for? You use your higher time frame. Just take notes. It doesn't have to make sense now. You use your higher time frames to know the direction of the markets, and then you use your lower time frame to enter or for entries into the markets. So I just want you to take note of these things, but let's not get carried away with what I wanted to show us in the first place. So every candlestick forms, like the previous video, you can saw when the one for yesterday closed and then a new day opened, right? Meaning that on the M1, that is 1 minute, this candlestick, it will open, form its high and low, and close within 1 minute. On 2 minutes, same thing. On 1 hour, it will open, form its high and low, and close within 1 hour. So that is why when you look at this crosshair that I'm moving, this is 1 hour time frame. You realize that as I'm moving it, the 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 time you are seeing below here is the time that that candle opened. So you realize that it changes per hour: 5 p.m., 6 p.m., 7 p.m., 8 p.m., 9 p.m., 10 p.m. That's because every new candle opens every hour, every 1 hour. When we go to check for 1 minute too, you observe currently what's the time? The time is 2:56 p.m. You see that this one that is forming currently, can you see the time? 2:56 p.m. So everything on the 1 minute time frame open and closes. By the time we get to 2:57, another one will open. Let's just chill and see. It's less than 60 seconds away. So it has opened, this one opened here, It is currently going down. So if it eventually closes below the open, then that's a bearish candle. But of course, for my charts, you can see it has closed. And now we have another one. And what's the time? 2:57. Sure you get. So every candle on the 1 minute opens and closes within 1 minute. So when you put the crosshair on any candlestick, the time you will see below here is the time that that candlestick opens. So one of the things I also want you to now take notes about candlestick is that the time a candlestick opens and closes, that time that it closed is the same time the next candle opens. That's number one. Number two, the price level on which a previous candle closed is the next price that the next one opens. So 1 minute is too fast, but I'm sure you are getting the logic. Let's go to 5 minutes now and put a crosshair. Can you see that this is 2:55? The timing here is in 5 minutes, meaning that every single candlestick on the 5 minutes time frame opens and closes within what? Within 5 minutes. Those are the things I need you to take very, very important note of as far as the market is concerned. Sorry, I'm trying to monitor a trade that I opened and is currently misbehaving, as it were. So you can see this is 2:55, meaning that the next time another candlestick we open on the 5 minutes time frame will be 3 p.m. because that's 5 minutes plus 2:55. That's one thing I want you to take note of. When you go to 45 minutes too, it means that the candlestick here opens, goes to the high, comes to the low, and does what? And closes within what? Within 45 minutes. When we put the crosshair on it, can you see 2:55, 2 p.m., 1:15, 12:30? Are you getting it? And what I want you to take note of is that this particular candlestick opened by 1:15. Remember that the time you are seeing below is the time that that candlestick opened. So opened by 1:15, it will form for 45 minutes, close by 2 p.m., and then the next one opens by 2 p.m. So the time that the previous one closed is the time that the next one opens, just as we saw on the 1 minute time frame, but you can replicate it on every chart. When we go to the 4-hour also, you can see 7 a.m. because the market does not open on our own 12 noon. It opens at 11 p.m. I hope I'm making sense. So let us check. Good. This is Tuesday. So the candle for Wednesday opens on Tuesday, 11 p.m. Don't get it confused. The Forex market is own. The Forex market on its own has its own time that it opens and closes. But I have converted my own chart to Nigerian time. And what I'm saying is that the time that the market itself opens in the general market server, the 12 a.m. over there is 11 p.m. here in Nigeria. So the market opens by 11 p.m. and this is the 4-hour chart. One candlestick opens and closes within 4 hours. I hope I'm making sense to you. So within that 4 hour, 4 hours after 11 p.m. will be 3 a.m. So meaning that this candle that opened at 11 p.m. on Tuesday will close by 3 a.m. on Wednesday. Can you see? Once this one closes, this one opens automatically. That is how the market moves. And then the next thing I now want you to pay attention to and understand is that every time a market closes, it closes as a certain price level. That certain price level where the market has also closed is where the next candle opens. Don't get it twisted. It's as simple as simple. What I'm trying to say is, every candle has its own open, high, low, close. Yeah. Now take a look at this. This particular candle, what is the open? 1.24038. Where did it close? 1.23717. I want you to take notes of the next candle. What is the open? 1.23717. What is the close of the former one? 1.23717. Because when you also check it here, you can see it clearly. This one opened above, came down, closed below. The next candle opens on that same price and then can decide to close above or below. But of course, this one closed above. And you can see that this one closed at 1.23745. Be checking the parameters up. When it closed there, what happened to the next one? The next one also opened on that same level. So what I just want you to take note of is that the closing price of every previous candle is the open price of the next or present candle. I hope that is making sense. This is 3 p.m. amazingly. So meaning that another 4-hour candlestick just opened. This is it. Can you see? So this one closed at what? 1.23002. Where is this one opening? 1.23002. It's just simple characteristics and nature of the market that the time and price that a previous candle closed is the time and price the next or present candle will open. So we've talked about the nature, open, high, low, close, how that the close of the previous is the open of the next, how that the time that the previous closed is the time that the next one opens. And we've talked about type of time frames, higher time frames and lower time frames. These are all the things you need to know that they will come together inside your understanding, and with them you can use to make analysis. Because the next phase we are moving to after now is technical analysis, and it is important that your understanding on candlesticks is grounded. So if you have any question, please do not hesitate to ask. But I believe I've touched everything that I need to explain in conjunction with what you've read on baby pips. So having established that we have candlesticks, that candlesticks is what gives bodily representation to the invisible fluctuation of prices, and that candlesticks have properties, which is the open, the price that the asset opened at that time, and the close, the time, the price that it's closed. It could be for the day, it could be for the hour, it could be for the week, it could be for a month. But the most important is that the opening price is the price that that asset opened for that trading period that you are considering. It could be 1 month, 1 week, 1 day, 4 hour, 1 hour, or 1 minute. So the opening price is the price that that asset opened for that period. The high is the highest price it got to. The low is the lowest price it got to. And then the close is where it's finally closed. And we established that there are 2 types of candlestick, bullish and bearish. Bullish is when it buys, bearish is when it sells. The high and low for the bullish and bearish are always the same. What is different is the open and the close. For bullish, the price opens lower and buys and close above. Price increased. For bearish, the price opens above, comes down, close below. That's for a selling or decreasing market. We've established that the higher time frame is the time frame where you go to analyze and know the major direction of the market. And lower time frame is where you now go to pick an entry position. Higher time frame includes the weekly, daily, and 4 hour for we that are intraday traders. And lower time frame include 1 hour, 30 minutes, 15 minutes, and 5 minutes. Although as an individual, you rarely see me go to 5 minutes. The least where I stop is 15 minutes. So we've come to the end of a deeper conversation or establishment into what candlesticks are. I believe this will add to the knowledge of what you've seen on baby pips. And then from here, let us make progress to the next lesson. So I look forward to seeing you on the other side. Cheers and God bless.